What's up, guys? Welcome to the first Lux Talks. I just thought of this while I was taking a shower and thought of some things that I figured might be worthwhile sharing. So I'm going to share with you my top 5, words of advice or top 5 things for new traders. The first one is huge. And, let's do this. Let's bring this over here, shall we? Yeah. First one, simplicity is key. You may feel like you need to add more stuff to your trading plan, and that'll make it better. That's wrong. Entirely wrong. The more stuff will overcomplicate and decrease performance. The simpler it is, the easier it is to execute consistently. And I think that's important to remember, is that the more complicated the things are, the more moving parts there are. And like, what if, this particular section of price action doesn't print one of your little criterias in the list of 100 that you're looking for? Well, now what do? What you wanted wasn't there fully, entirely. You don't take the trade and you miss out on a good one. So, it could go a million different directions. The point is you want it to be simple so that it's easy. You can spot it like that. Market moves fast, so you got to be able to spot it in the blink of an eye. You got to be able to execute it without hesitation, because every single time price hits this fair value gap, it works. Or, whatever your plan is, it's got to be simple enough for you to just be able to see it and execute it every single time. 2, focus on one thing. This is a double-edged sword and something that I've kind of struggled with too. We'll talk about that. But the first thing you need to find is something you understand, something that clicks for you. I've migrated through many ICT models and concepts looking for something that clicks for me. Often the understanding is short-lived and it doesn't really make sense or click for me anymore. And then it starts to fail for me when it comes to live markets. Usually I do pretty good in backtesting or studying or even sometimes in demo trading. And then when it comes to the live market, it just doesn't work for me. I'll talk about that in number 5. You may find yourself trying different things, and that's okay until you find something you understand. And it aligns with your style of trading and matches your personality. Some of you are not swing traders. Don't even bother studying long-term swing trading strategies. It doesn't make any sense. If you don't want to hold for the whole day, don't study day trading. You want to, or whatever it's called, intraday trade. You want the scalps. If you're a scalper, you want the quick moves. Study that stuff. The CAM's 30-second model, quick in and out. If that's what you want in 2 minutes, 5 minutes or less. It's got a good win rate, but it loses sometimes because there's not a whole lot of narrative and context to it. If you can handle 60% win rate, but you're in and out in 5 minutes, go with that. If you want something where you hold for like an hour, look for those types of strategies, something that fits your personality, and study those, not all these other concepts that don't fit that, right? I thought I understood IFVGs recently. I thought that was awesome. Backtesting was incredible. I was hitting 80, 90, even 100% win rates on 2 to 4 week spans of time for backtesting. And I was like, this is it. And then it comes to the live market, and I don't know what I'm doing. IFVGs all over the place. And there's a list of criteria that makes a particular IFVG setup higher probability. And I feel like I see them. And then it just doesn't work. It just never made sense to me. I never understood it. I never got it. And I lost way more than I won. To be honest, I thought it felt like I was missing something. There just was something not working for me. So I moved on. Same thing has happened to every other strategy that I've posted a video on. I've talked about Nexus Blast before. Amazing strategy. It wasn't my style of trading. Usually, you get those setups once a day. Sometimes you can get a PM setup, but it's really focused on the AM session. You get one setup, you miss it, you're done. Sometimes, and sometimes you only get 2, maybe 3 a week. So if you miss those, that's a week of nothing. You know what I mean? So like, to me, I wanted something that was had a little more option, a little more opportunities for trading. So a little smaller scale. We want something that maybe happens every hour or something like that, where I can get in a couple times in the day in case I miss something. I'm still learning, so I might miss it, With IFVGs, I just never felt like I was able to feel the flow of the market or get into the zone. I would just see an IFVG came out of nowhere. And I'm like, okay, is this the one? Well, it does have this, this, and this, so maybe. It was always a maybe. And then I would enter it and it would go wrong. And I'm just like, okay, so that wasn't it. I don't understand why. It just was a struggle. So, so far the market maker models have checked those boxes. It's got a longer, I guess, narrative building up to where your entry opportunities are going to take place. You have to see certain things form that kind of guide you to find the narrative. And if you don't see it, you don't take a trade. So it's got to look a certain way. And when it does present that way, it's very high probability. If it doesn't quite present that way, it's a little sloppy. Well, the other, so the buy side of whatever curve, whether it's up or down, that the left side of the curve on a market maker model is sloppier. The other side where you're going to be entering is probably going to be sloppy too. So you can size down and be like, well, if I see something, I'll take it, but this narrative looks sloppy. And so it just really helps guide you all the way down or all the way up to the peak or valley before you crest the other side. And you kind of know what to expect. And you know what you're looking for. The model has a structure, a very laid out structure. So you can see this happening. Okay, I know this is going to happen next, right about here. So what am I going to enter off of? Is there a PD array that's here that'll give me that opportunity? Because I know that opportunity is right there. Just got to find something to enter off of. So far I've really liked it. And I'm still learning it. And I'm hoping for some new success with that. And if you follow along in my Discord, you'll see me talking about it and things like that. So number 3, don't focus on the money. I struggle with this a lot. I have real life obligations and bills to pay. I'm doing this for the money, and it's all I can think about. And I need to stop that. I'm going to be doing this going forward, and no matter who it is that I talk to, whether I'm actually talking to them or I see a video they post or a Twitter thread they post or whatever, anybody who has become profitable in trading did so by numerous things, this being one of those things, not focusing on the money. I'm going to turn off everything that has a dollar amount to it. The little lines when you enter in a trade and where your profit and stop loss are going to be either, honestly, do percentages because they make no sense. Like you can kind of quick calculate how many ticks are in a point and then how many dollars per point, and you're down 40 ticks. So that's, I don't know, 5 points. So that's $125. And you can sit there and like focus on that. If it's a percentage, 0.04%, I'm down 0.04% of whatever I have no idea what that is because it doesn't matter. Turn off everything that has to do with a dollar amount. The only thing you want to focus on is the process. You want to make sure you're understanding the model and trading consistently and focusing on price action, not the dollar amounts. So I'm going to start off each day with your first trade being your usual full position. If you win, you reduce to half size for the next trade. So you kind of put some aside. You're green. You don't touch that. No matter what happens, you'll be green for the day. Half of your first win. You take the other half, and now you're playing with that house money. So now you take another trade. If you win, you take half that, put it aside, and you trade with what's left. That way, you continually stack little bits on your profits, and you just keep trading half the size you did last time. Or you can, it depends on, whatever you want to do. Say your first trade's full size, and you set aside half. So now you're trading with half size, and you win. Your next trade, you trade with half size. Still, you don't change that. You just trade with half of your original risk every time, but you always set a little bit into your bucket so that you're green at the end of the day. If you lose, same thing. You go in your first trade with full position size. If you lose, cut it in half. You try again. If you win, great. You've recovered half your loss. Try again. If you lose, now that's two losses in a day, you're done. Right? At most, you've lost one full position now because you're full, you gain back half, and then you lost the half. So now you're still down a full position size. Great. Because what happens when you go into the next day and you have a winning day? You're going to be up more than a full position size because you're going to be stacking those pieces on each winning trade. So think about a good risk management plan, something that makes sense for you. Go Google it, go YouTube it. What are good risk management plans for most of you, small accounts? I trade 25K accounts. I'm going to try to move to 50K accounts eventually or higher than that, but I'm starting at 25K because they're easy to pass and they're inexpensive. So where are you at? Go find a plan that makes sense, a plan that makes sense for you, a plan that you can do and utilize that. Focus on the risk management. Check your P&L after the market is closed for the day so you can establish your position size for the next day. Don't be looking at your P&L all day long. Don't look at it at all. Wait till the market's done. Establish your P&L for the day. How'd you do? Which is relatively insignificant anyways because you're focusing on the process. So how did you do during that day? Did you execute the trades the way that you were supposed to? Did you jump the gun? Did you hesitate? Did you close early? Did you move your stop loss when you shouldn't have? In either direction, you should never make it bigger, but did you move it to break even and then it got stopped out before it ran to your profit? So make a note of that. Focus on that process and good risk management. Don't even check your P&L till the end of the day and then establish where you need to be for the next day on your position size. And that's it. You don't even have to look at it in the morning. Number 4, you need narrative and context. I see this a lot, and I've done it with trading ICT and trading ICT concepts. It's not just about executing one of his numerous entry models. He's got a bunch of them, and they're all similar, for the most part. You need narrative. You need bias. You need context. Different words for the same thing. This is why I've latched on to the market maker model. There's a whole narrative that you have to find and read before your entry opportunity appears. And if you can't find narrative, you don't enter the trade. Simple as that. So it's not just about finding a breaker block somewhere with an overlapping fair value gap and call that a unicorn and enter off of it. It's not about, you got to look at everything else that has happened before that. You got to read the whole narrative. You might be entering on a bullish unicorn in a huge bearish downtrend. Why would you do that? You'll probably get stopped out. You know what I mean? So you got to have way more narrative. Did we take liquidity before forming the breaker? Did we, you got to find the story of price before you can just enter off of a random PD array. It doesn't work like that. But a lot of people don't understand that. They don't understand bias. It's a scary thing. How do I find the right bias? And bias, context, narrative, order flow, it's all the same. It's all the same thing. The words all mean the same thing. What you're looking for is, what is price doing? Is it moving down or is it moving up? Like, it's really not that hard. What did it do yesterday? Huge downtrend. Okay, well, do we have any signs of it going up yet? No. Okay, that's probably going to go down then. Like, it's really not that hard. And you're not always going to be right. Let's just accept that. I want to make a video on how to find bias, but it literally would just be like 10 seconds. Okay, what is price doing right now? Moving down? Okay, that's your bias. Are we breaking swing lows or are we breaking swing highs? We're breaking swing highs. Okay. Bullish. I mean, it's really, that's all I look at it. It's simple. Simplicity is key. I'm not looking at anything else. Are we stair stepping down? Cool. Guess what? It's bearish. Until I see otherwise. It's like with the market maker model, it stair steps down until I smack a huge PD array from a higher time frame. Okay. Are we going to turn around here? I have no idea if that's going to hold up or not, but we're going to watch and see. What I'm going to want to look for is there an SMT? Is there a market structure shift? Is there displacement? Immediate reaction off of that PD array? Is it respected? Is consequent encroachment respected? There's a bunch of different ways to tell if price is gonna react off of that and change direction or not. And if it does, while you're looking at that, and you're like, I don't know if this is going to hold up, but if it does, where could price go? If it does want to change direction here and show me that sign, my bias can change, where would it target anyway? If there's no good target, it's probably just cooling off or retracing a little bit to grab some stops before continuing on in the same direction. So anyway, you need narrative and you need context. You don't just trade entry patterns. You're not a retail trader. If you want to trade entry patterns, go find an indicator that shows you all the fancy bull and bear flags and triangles and wedges and shit, and go do that, because it's the same thing. So find a narrative or it's not going to work. And number 5, finally, submit to time. ICT says this a lot himself. This is not going to happen quickly. Profitability will likely, for most new traders, not even happen this year or even the next. I am 2 years in to trading, and I'm not profitable. And I have no problem admitting that, and I'm not trying to claim that I am. That doesn't mean that I don't know what I'm doing. It doesn't mean that I don't know the concepts. I have a plethora of knowledge. You can ask me a question about ICT concepts, I probably know the correct answer. It's not about market knowledge. Trading is easy. You see the setup, you hit the button. Sorry, apparently I'm already talking too much. My throat's getting dry. Trading is easy. What makes it anything more than that is you. You get in your own way more than anything else. I get in my own way more than anything else. You need to trade your plan over and over and over and over again. So there is some submission to time in executing your trading idea and concept over and over and over and over so that it comes naturally. It's easy to spot in price action. An NBA star did not become an NBA star just all of a sudden. They spend hours and hours and hours and hours shooting the ball, dribbling the ball, running with the ball. They practice over and over and over and over until it's second nature. They don't even have to look at the ball, and they know where it's going to be in their hand when they dribble. It's like one with them. That's you with your trading plan. The real dedication and time is training yourself to think logically, manage your emotions, learn what proper risk management is, that's what takes years. But once you understand yourself, everything else is easy. The managing emotions part is the biggest piece, at least for me. You can't control your emotions. Emotions happen no matter what. It is an involuntary response within our bodies, within our minds. We have no control over that. The emotions are going to happen. It's what you do with them that you have control over. That's where you want to focus on managing that emotion, not trying to make it not happen. Everybody who enters a trade gets a little bit excited, sweats a little bit, heart starts racing, blood pressure increases, whatever. Everybody feels that. But it's how they deal with it that makes or breaks their abilities in the market. So learn to manage it. Learn to make it affect you less. You get all excited and sweating in a trade, take some deep breaths, walk away, look at something else. Positive self-talk, turn on some music. So it's about managing those emotions. Obviously, you want to learn what proper risk management is, because out of anything, what we do is risk management. That's the backbone of what trading is. So submit to the time that it takes to learn those things while practicing your model over and over and over again. It takes a weekend to learn a model. Okay. That's easy. That's not what trading is. Trading is more about you than it is about the market, about your strategy, about any of that. So those are my 5 things. This was honestly me talking to me more than it was me talking to you. So I have no problem, admitting that I also need to work on all of these things. And if you've watched any of my videos leading up to today, you can see all the different strategies that I've tried, all the different successes that I've had with them, all the knowledge that I know and that I've gained. And, I'm going to keep learning and developing and finding something that works for me. And eventually you're going to see me posting videos about payouts. I mean, that's all there is to it. So stick with it. Work on those 5 things. And I think that will help any new trader in understanding what it takes to actually be profitable. It's more about the process than it is about the profits. So just remember that. All right. Thanks for checking it out. See you next time.